It's getting weird, people. Very weird. And I'm going to show you what I mean in all of these charts in today's stock market brief. You know, I was going to make a video yesterday, but last night, while I was eating dinner, it was a session of dinner and a show where I'm eating on those little stands, by the couch. I'm eating dinner. And I accidentally kicked the TV tray and the steak knife fell off and into my ankle, and it hurt so bad. It still hurts, and yeah, it was a mess. It was a mess. Where was I going with this? Oh yeah, we're gonna go over some really cool charts today. Yeah, potentially a crystal ball into where the market might be headed next. If you're new here, welcome to the channel. My name is Michael Silva. This is the Stock Market Brief Show. We use technical analysis, intramarket analysis to get a good idea as to where the stock market might be headed next. Let's get in to today's show. Oh, welcome back, everybody. Let's start off here. The dollar. All right, this is where it gets weird. Look at this dollar move. That's a pretty decent move, up 0.5%. Still just chugging along sideways. Maybe somebody might be like, hey, it's a little inverse head and shoulder, a little left shoulder head, potentially right shoulder. It's going to break this neckline and go ba-boom. Typically, there's an inverse correlation between the dollar and the stock market. And what I mean by that is when we reach up this high level and start heading down, that really propelled the market moving forward, right? We've been going over this nonstop. I'm not going to beat it, till I'm blue in the face. Just know that there's typically an inverse correlation. Well, today there's a big up day in the dollar, and the equity market still continues to perpetuate higher. And what's even weirder is the dollar had an update that typically puts pressure on commodities, but look at gold. Gold was up almost 2% after, previous pretty huge trading day to the downside. Something's not adding up here, people. Meanwhile, Bitcoin is actually headed south. It's been kind of consolidating sideways. We pointed out a little bull flag. We broke out. Now we're seeing some continued weakness. Really just trading sideways. This is not a bad sign, but it could get bad. It can get bad fast. We look at the Sailor to Shift rotation tool here. Still above zero, so nothing to sweat, but you can see the weekly time frame's not turning out all that great. You have these candles with these long upper wicks. It means indecision. Look at these small little range bodies here. It means that the bulls and the bears are just head to head right now, deciding which way they want to take it. And we know that we've seen previously, sometimes Bitcoin leads the price of the market 5 to 7 days, sometimes. And it actually helped us find the bottom in the S&P 500. Perhaps it might help us find a short-term top in the market, or, a period where we consolidate. Look at the TNX. This is the 10-year yield. No one's calling this out quite yet, but I would imagine that people might hear soon if it starts breaking out. But there's a possibility that if we get down through 1.5 or 15.0 here on the TNX, this could play out as a little topping pattern, right? A head and shoulder, a little left, head, right? There we go. Break down the neckline. That comes to around 1.35 in the 10-year yield. Well, if the yield drops, that's good for tech. And we've been saying, hey, we're bullish tech, because tech has been seeing some, on the weekly time frames, a lot of breath, like it's just a lot of base breakouts. Sorry. Now, if we take a look at the TLT is forming somewhat of a bull flag. Had a big nasty day on the Fed day and the Fed announcement. Which what happened in the Fed announcement? What was expected came out, right? Rates are staying down despite the great economy, right? We can't raise rates up a quarter point. And they're beginning their taper process. Still a lot of QE taking place, but the beginning of a taper process. So the market didn't really do anything. All right, but the potential for a bull flag here where you break out. Now I'm really starting to wonder here if the dollar's moving up, gold's moving up, TLT is moving up. It seems to me like people are positioning themselves for safety, right? Why would gold go up when the dollar's going up other than just a safety trade? That is where I'm trying to get your head thinking a little bit right now, because the market has been getting a little overextended, to say the least. But that doesn't mean it can't keep perpetuating itself higher and higher and higher, because this, by all means, looks like a melt up. Now, if you take a look at the yield spreads kind of coming off a little bit. Like it was heading towards inversion, but it's still far away. But now you can see the yields, the 30, the 10, the 5, the 3, they're pointing down, right? So they're heading down a little bit now, which helps tech. But what does that hurt? That hurts financials. So if you look at today's performance, tech led the way, 1.56% gain. Congratulations if you played it. Financials down 1.31%. Now when financials are down, typically you see them move hand in hand with energy. Where was energy? Energy was basically flat. If you take a look at oil, well, oil's kind of coming off a little bit here. Interesting. Now, I mean, it's still in an uptrend. Like we've been saying, like, okay, I wouldn't be going long over here, right? I would wait for it to consolidate, to pull back, to do something like that. And now we're starting to see some increased volatility. And by increased volatility, I'm not just saying because it's heading down. I'm looking at the range from high to low on these candles and look at how they're expanding and how much it differentiates itself from previous candles. So the volatility is definitely, it's expanding here, right? So we're seeing larger swings. Still overall in bullish context, but we're coming off a little bit, which is obviously going to hurt energy stocks, various energy stocks. If we take a look across the board, how did we finish? Pretty mixed board overall, right? S&P 500 up, VIX is up. What's going on here? It's weird, very weird. But now this is where it gets interesting, a potential crystal ball, okay? Commodities. Now typically, since I'd say 2008, stock and commodity prices are pretty correlated with one another. So you can see here, if I remove these blue lines, the Crb Index has been moving up, the S&P 500 has been moving up. Why am I pointing this out now, and what are the blue lines? This is where it gets interesting, folks. You ready? I hope you're ready. These are little peaks. So we got higher highs that I'm pointing out on the Crb Index. Yeah, there's higher lows too, okay? So it's trending up, S&P 500 is trending up. But the higher highs, the little high peaks, just look down, okay? Look down here, S&P 500. When the Crb Index reaches the little high point and started heading down, the S&P 500 moved down too. High peak, and then it started moving down, boom, moved down. High peak, boom, moved down. High peak, moved down. At this time it actually went up a little bit more, but it reversed that entire move. And guess what? When it bottomed, it moved up higher. So we're still trending up, but this is where it gets interesting, right? So also right here, right? We started heading down, moved up a little bit, boom. This one actually lagged. It actually went up higher, drifted up higher, but then it reversed that entire move too. Right here, boom, headed lower, came back up, reversed, and then started heading higher. Why am I pointing this out? Look at what's taking place in the Crb Index. The Crb Index is coming off, but the S&P 500 continues to put in higher highs and higher lows almost vertically. Okay? So do you want to go long right here? When you see this correlation take place, you're seeing this come off. Now the Crb Index, a large weight of it is energy. And so when you're looking at this and you see oil coming off, it's potentially an early warning sign that we might start coming into a period of consolidation or a little bit of a back off. So it's our job to start looking for areas and pivot points where we can go long. It doesn't take a rocket scientist to see this, and I'm by no means smarter than the average cub, right? My dog, Coco, is significantly smarter than I am. I am just pointing out some correlations, some patterns that I see, both bullish and bearish, so you can come to your own conclusions. Because when it comes to trading, and you want to be a good trader, I posted this on Twitter. There's really only 4 things that you have complete control of. It's what to buy, how much to buy, when to buy, and when to sell. And if you get really good at those things and structuring plans and sticking to those plans, you can be a very good trader. You can be a very good investor. So if you think the market's going to go short, you don't want to just create a trade that can wipe out a complete portfolio if you're wrong. Take steps, right? Position, I'm not going to get too much into it. Let's get into the S&P 500. When we were coming down off this, down here, everybody was like, nope, this is where we're going to go into the full market crash. Yep, nope, that is not what took place, right? We were calling out, we're one of the only channels probably, maybe not, I don't know. I really don't. And you know what? A lot of this also it's not just me that I was saying this, but a lot of the comments saying, no, this is like, we're looking for areas to buy the potential dip. And we pointed that out. And this rally right here, yeah, based off of seasonality, it's playing the script, but I didn't expect a move like that, and it's continuing. RSI is getting overbought. We're moving back up, back tested. REAP came into this wedge, and we're right by the upper Bollinger Band. It's definitely possible to tag 4,700, but I would imagine at some point we're going to run into some resistance, and we're going to have to come off a little bit. And typically what I've seen in the past that you can watch for is you can see a very strong advancement, either goes into a period of consolidation before its next leg up, or you can see up to around a 50% correction in that advancement. So for example, if this kept on perpetuating itself higher and then it pulls off, perhaps the 20-day, 50-day moving average, so 4,500 to 4,550, it pulls back into for that area of support. And then you just got to be ready. You got to be ready to move and position yourself for long spots. Now, S&P 500 SPY on the 15-minute time frame, we were waiting previous to all this. This purple line is now short-term and bullish context. That's what we said. We were waiting for it to, go from bearish to neutral and then trend up higher. And that is what it's doing. And even today, it didn't have any action today up until close. It got jammed up higher. So, potentially a little pennant, and maybe it just wants to continue pressing higher here. As far as short-term, where's the support? I would just be watch the 5-day moving average. We've had very few connections to the 5-day moving average, which is pretty rare because this is the most frequently tagged moving average here, right? So the last time it connected was right here on the October 29th. Prior to that, October 28th. We're well into November now. So maybe a reconnect here is in the near future. What I find interesting is a 30-minute time frame. I'm going to try to speed this up a little bit because I got more charts to go over to. 30-minute time frame on the VIX. So it broke down from this little flag pattern that we talked about, right? This channel, it was moving up. That was interesting, but we broke down, came back test, and headed lower and bounced right up today. And what's interesting to me is the market continued to press up higher. So perhaps this comes back down and we get that VIX Crest Friday, which pushes the market even higher. And maybe to that 4,700, and that's where we start getting, a little bit more resistance potentially. At 47, right? It's not too far off. So that's something to potentially pay attention to. If we take a look at the Dow Jones Industrial Average inside trading day, we did breakout, backtest, moved up higher. A lot of green days in a row. There's still really no consolidation here. The market's just moving up. That's all it's doing right now because apparently down days do not exist. DIA on the 15-minute time frame. Short term, obviously bullish context, continues to trend up with the 5-day moving average. Keep on moving down the list. Transports, come on. What the heck? Last time we talked about this chart was right here, this little bull flag. We're like, no, it's consolidating. Once again, was not expecting, no one was expecting, let me just say, a move from 16,000 above 18,000 in a single day in the transportation average. What is going on? This market is just bonkers. So obviously, and that was like a full measured move in one day. What the heck? So absolutely craziness going on. I know you probably heard about CAR Avis. That was like 100% in the day, intraday. Crazy. NASDAQ 100 tagging the upper range of this channel. RSI is getting pretty darn frothy, right? So large advancements start like this. So, perhaps it's moving up and then we back off a little bit at some point, right? It's going to happen. Could be aggressive move. It could be a 50% retracement of this advancement, which brings us to around the 20-day moving average, which is about 15,500, and get ready to press long. You got to look for positions to hedge long, but right now it's up the upper range of this channel. It's getting overbought. Can it extend further? Absolutely. Do you want to press long right there? As long as you're very tactical, intraday trading, whatever the case is. But if you're putting on long-term, positions or, swing trades right here long, there's more risk than there is reward. Qs on the 15-minute time frame, still trending up in the short term, getting a little bit frothy from the 5-day moving average. As you can see, it's been trading above. We haven't had a reconnect since the 25th of October. So that will come. When it comes, I don't know, but we had that new high on that negative divergence A little bit of a rising wedge type pattern here. We broke down. We came back to back test. We'll see what takes place tomorrow. What I find interesting overall is the VXN. We're putting in higher lows every week right here. So 1 week, 2 week, 3 week, 4 week, higher lows. Positive divergence taking place. Bollinger Bands getting pretty tightly contracted here. Maybe this sets up for one of those poof spikes to the upside, which takes the NASDAQ down a little bit here. A little bit of a breather, might instill a lot of fear in people. Then everyone's all of a sudden going to be worrying, no, the crash is here now. That was the melt up. But then we just even rip up even higher. It's been crazy. What a crazy day. And then semiconductors. A big portion of the NASDAQ composite is semiconductors. Like it broke out from this high, and then what the heck? Look at these moves. This is just melt up. Boom. Huge volume. What drove this? Well, NVIDIA. Look at that monster move. Ah! Holy moly. RSI, 88.18. Huge volume. Talk about a squeeze to the upside. This is absolutely just insanity. I hope, hopefully if you got gains on this, that you're locking some profits, because these are some extensive moves coming out. But that's not just NVIDIA, AMD. Look at that. A high today of 139. Now, I was tracking this a while ago. If you're on the Discord group and you've been there for a minute, you probably remember on 923, back on the radio, I said this would be insane. A full measured move on this bullpen, it would go to 143. That would be insane. Well, insanity at its finest, folks. It moved that range. Did it tag 143? No, but I still claim this to be just an insane move, to say the least. IWM. Yay! It broke out. Finally, right? A fresh breath of air. Movement to the upside today. Down slightly on the day on significantly less volume than the breakout candle. So yeah, maybe this comes in a little bit. It would make sense to come in a little bit. But it would also, on a breakout that's been consolidating this long, I would expect this thing continue to squeeze higher. That would make sense, especially looking over at the weekly time frame. But we're seeing it extended above the upper Bollinger Band. The Bollinger Bands were tightly contracted. This looks like a Bollinger Band squeeze at its finest. If you take a look at the 15-minute time frame, we're well above the 5-day moving average, getting a little bit frothy past that. So I can imagine a reconnect as a potential pivot long entry. You can see here that rising wedge. We said this would be the one that I want to hedge long in. We broke out. We moved higher. We moved higher. Actually, this little wedge right here was something that I called out on Discord too as well. And I mean, come on, holy moly! Once again, if you traded this to the upside, I mean, hopefully you're taking some profits. Like that's a big move right there. And then we wedged right there, boom, right up to the upside. And now we're pulling back. This could be a little bit of a bear flag. That would make sense. Like a reconnect down here. I mean, that would be good to see. Potentially, if we get a reconnect down to the 5-day moving average, look to see if the RSI is getting oversold conditions, because if you get oversold here, you move strongly into the 5-day moving average. That, to me, sounds like a good pivot area to potentially catch a little move to the upside or, hedge long. Now, let's take a look at some stock market indicators. Now, this is where it gets pretty bullish, right? The new highs. Finally, we're starting to see some strength here in the NASDAQ New High Index. So this is moving up higher, and that's moving with the price. So positive there. Breadth, percent of stocks above the 50-day moving average, perpetuating itself higher there as well. Same with the 200. So these are positive developments. For a while, we were seeing this go up, and the percent of stocks head lower, which was very interesting. What I do find, as far as a couple warning signs go, the BPNDX has now, it's back into overbought territory with a little bit of a negative divergence. You can see the higher high right here, the lower high in the RSI. As we're reaching these overextended areas, once again, proceed with caution. We have a negative divergence on the Nyseed-McClellan oscillator. This is the traditional calculation here. I'm not going to go into that. Just want to point out high, lower high, high, higher high slightly. And this is a negative divergence, which sometimes results in moves to the downside, okay? The NIMO, the Nyseed-McClellan oscillator, this is ratio adjusted. This is just a different calculation. You can see it differently. You can see here, the reading's been heading lower. Price has been going higher in the S&P 500. This is also interesting. This is the NASDAQ McClellan oscillator, the NAMO. And something that I wanted to point out here is it's reaching these little, it's around 50, could be considered overbought. And last time it reached up there, the market went a little bit higher, but it ended up cooling down before heading higher. And then right here, reaching in that extended area, went a little bit higher and headed down. reached up here again. Market's going up a little bit higher. This is coming off. Perhaps that's an early indicator saying that the S&P 500, the NASDAQ 100, I could have put that on there. That would have been better. Might come off here just slightly. That doesn't mean it's going to crash. Okay, folks, I'm not predicting. I'm just preparing you. I'm letting you know where your risk is and where the potential reward is. And you could create your trade plans around that. Okay? NIAD, NYSE advanced decline volume line, still also a negative divergence, right? A high, a lower high, higher high. Just, that's not what you want. You want this to be heading higher. I will say the advanced decline line, though, not the volume one, that is breaking out to all-time highs. So that broke out to all-time highs, which is also a positive thing. If we take a look at housing index also is very interesting to me how this has not broken out and made new highs. Meanwhile, the S&P 500 continues to press higher and higher. That to me is not the greatest sign. We're seeing things like Zillow just fall off a cliff. Let's wrap this up into the conclusion. So, I'm bringing all this to your attention. I'm looking at bullish things. I'm looking at bearish things. This is a couple things I want to show you, okay? IWF over IWD, Russell growth over value, growth breaking out to these highs right here, resistance breaking out. Growth still seems to be the play here over value as it stands right now. And when you take a look at the weekly time frames for some of these FANG stocks, right, the S&P 7, the big boys, the mega caps, they're breaking out and they're just moving. They're getting stronger and more attention. Things like Tesla, which is insane, Microsoft, Google, they just keep going higher. Which means that when they head out, when they get down, when you see some weakness, it's gonna hurt the markets. But as it stands right now, growth is still showing strength, and we talked about the S&P 500 over equal weight, which is basically just mega cap over small companies. Inverse head and shoulder, broke out, back test, heading higher here too as well. So from a relative basis, it seems to me that these mega cap stocks still are continuing to show strength. That can change very quickly as things are getting overextended. Perhaps it goes into a period of consolidation. It comes off a little bit, but I don't think that this is the end of the move. I think that it might be the start of a period of consolidation, a back off, but I think that we're going to be continuing to perpetuate higher after that, and I hold the right to change my mind if things change. But that's all I got for you on today's episode, everybody. Have a wonderful night.